Well, as we discussed earlier this morning, inflation posted a resurgence in July with consumer prices rising 2.8% annually, according to the monthly figures from the ABS, an increase from 1.9% in the CPI recorded in June. To talk to us about this, we're joined by Chief Economist at the MB Fund and MB Super, Leith Van Onselen. Leith, good to talk to you again.
Yeah, g'day, Stephen. How are you?
Very well. Look, this comes as no surprise, given that energy prices have increased and the rebates on energy have now come off. This was bound to happen.
Yeah, it was. But it certainly did catch economists by surprise that there was such an impact this month. So, for example, CBA were forecasting 2% rise in inflation. The market consensus was 2.3%. Westpac was also at 2.3%. So the fact it jumped by 2.8 is actually, a lot stronger than expected. And a lot of that is because of this uncertainty about the impact of these energy rebates. So most people didn't think that we get a 13% hit in 1 month.
Yep.
Now the upside is that it's obviously been brought forward to 1 month, and economists thought it'd be sort of extended over several months. So it means that the inflation hit has been hit in July, but it also means that the monthly inflation should be lower in the next couple of months because we've already taken the hit, if that makes sense.
Yeah, okay, yeah.
Yeah, it's also worth pointing out that the monthly CPI is incredibly volatile, so it jumps up and down like a yo-yo, and it's not nearly as comprehensive as the quarterly figure. So what I think the upshot of this, Stephen, is that it basically means that the RBA is going to sit on its hands at the September meeting, and it's going to wait for the quarterly CPI number to come out, which comes out in late October. So I think, a rate cut at next meeting in September is almost ruled out because of this, but, we could still get one in November.
Yeah, because, there seems to be conjecture about whether or not the RBA may move anyway because of projections on that quarterly figure. But what do you think happens in the short to medium term?
So the short to medium term on interest rates, I think we're still going to get a few more cuts.
No, I mean with inflation. What are you anticipating, moving forward?
I think inflation will still, moderate slightly. I think it'll still stay within that band just because the economy's so weak.
Yeah.
But unfortunately, this energy issue is going to be ongoing for Australia. So we've basically decided to give ourselves expensive gas and electricity prices, despite the fact that we export 7 times more coal than we use. We export 4 times more gas than we use. And we've locked ourselves into a high energy cost future, unfortunately. And that means that we're going to have this kind of, upward pressure across the supply chain. Not just for manufacturing, but basically energy feeds into every single cost in the economy. And we've kind of hamstrung ourselves there, and it's one area which, unfortunately, the Productivity Summit refused to mention. The whole discussion on it was, let's just get to net zero as soon as possible, damn the consequences.
So, Leith, does this, is it a wake-up call for the government, or do you think they just continue on down this rabbit hole? Because there doesn't seem to be any appetite for anything other than chasing these net zero targets, despite that their own people are now saying, well, you can't achieve them anyway.
Yeah, absolutely. And let's remember, Australia is 1% of the world's carbon emissions. So, no matter what we do, the climate's going to do what the climate's going to do. But the fact of the matter is, we are the world's biggest coal exporter. We're the second biggest gas exporter in the world. We're sitting on 30% of the world's uranium. We should really have the cheapest energy prices in the world, given that we've got so much of it. And unfortunately, we've decided to hamstring ourselves.
Yeah, it's absolutely frightening, isn't it? Makes no sense whatsoever. Leith, good to talk to you this morning.
Yeah, cheers, David.
All the best. Leith Van Onselen, Chief Economist at MB Fund and MB Super.